Hello there. Welcome back to Public Finance Ed 6. In this video, we want to look at module 1, that is on government revenue. So we are going to go through and try to see what are the sources of government revenue, where to take access the revenue. So we have got an introduction that is giving us that explanation. So it reads, whatever the government earns is money out of your pocket. So we can just take note of this statement that whatever the government earns, it's money out of your pocket. So what it actually means is the revenue that the government collects. It collects from its citizens, and remember, you are the citizen, so it's coming out of your pocket. Remember, through taxation, we are going to see that the government taxes the customers through VAT, that is value-added tax. So the citizens of the country are the ones that pay tax out of the government. So the citizens are the sources of revenue for the government. That's why we have a statement stating that it's money out of your pocket. So next sentence reads, however, this does not mean that they derive their income solely from taxation. There are times when grants, donations, and loans make up their income needs. In other words, they are forced to ask for aid or to borrow money to balance their budget. So we are seeing that the sources of finance that has been stated there. We have the issue of taxation of the sources of revenue. Taxation, we know that this is one of the main instruments that is used by the government through the fiscal policy, and obviously it accounts of the greater proportion of the sources of government revenue. So we are also going to see that we have got other also various forms of taxation that we have in terms of direct taxes and indirect taxes. It's something that we can as well try to go and find out what do we have in terms of direct taxation and indirect taxation. So we are being also told that as a source of revenue for the government. So we also have the issue of the government also accessing the credit lines, accessing the credit lines that is borrowing money. They can access those credit lines through the international bodies. They can go through we can talk about the international financial institutions like the IMF, that is International Monetary Fund. They also can approach the World Bank. They can also access some funds there. That can also be a source of revenue. So we are saying the third source of borrowing money. We have the issue of borrowing money. So we are using those sources that have been highlighted as sources of revenue. So basically, this is what we have in terms of our sources of revenue. So remember, also we also need to try to understand the purposes of this revenue. What do they use as the revenue? What does the government use as this revenue? And remember, there are many uses that can be made for this revenue that will be collected. Remember, we can talk the issue of government expenditure. The revenue will now be used for government expenditure through the the payment of taxes for the public servants. They can also be used for the construction of roads, bridges, etc., infrastructure development in the country, and also it can also cascade to the issue of generally providing citizens with maybe we can talk about businesses. We can also talk about the issue of grants being extended to the citizens of the country. So those are some of the uses that can be raised in terms of government revenue. So we go to the next part according to our video. So we are explanation that we are using there in terms of source of revenue, as then I treat taxation as the main source of income, firing at this source of income, that is to gather enough funds to pay for services expected by the taxpayers that we have. So moving on, we are now talking about the economic regulatory function. So the government may use taxation in order people, citizens have less to spend, and this is an effect of regulating the economy, generally by lowering inflation. When spending declines, inflation nearly always drops also. So Yes, we are also having the issue of taxation again, being used as a economic and regulatory function. Obviously, as we have explained, that taxation is an instrument that is used under the fiscal policy, and you know that the fiscal policy is affected by the government. So the movements of taxation can be used to control economic activities in the country. For example, we are having a high demand in the economy. Remember, when there's a high demand in the economy, we are going to see that demand is going to outpace supply. And in that instance, we are going to see prices going up, being pulled by demand. So it's going to lead to demand pull inflation. So the government can just effect taxation in a way to reduce that demand by employing what you call the contractional fiscal policy, whereby they increase taxation in the form of, for example, value-added tax, whereby if value-added tax is increased, it means also the prices of final goods and services are also going to increase. So in that case, that demand is going to be lowered as goods are now expensive, and this is going to contract the demand. And when demand is contracted, I remember by analyzing the forces of supply and demand, when the price mechanism is prevailing, we will see that the price will go down. So this is just an example of how taxation can be used as an economic regulatory function. So basically, vice versa can also be true. When they want to increase demand in the economy, they can just reduce the taxation. And obviously, in particular, as we are talking about the value-added tax, if it's reduced, if taxation is reduced, it means also the price of final goods and services is also going to be reduced. So easily can economic activities be regulated by using taxation. So basically, this is what we have on this part. Then moving on to the next part, we are now having the issue of retaxation is employed. Redistribution of wealth can automatically take place. This means that a low-income earner will enjoy the same protection from the defense force or of his year income that a wealthier person. So basically, also we also have the issue of redistribution of wealth. So basically, a redistribution of wealth, to simplify it, it is a transfer of wealth from some individuals to others through a social mechanism such as taxation. It can be through welfare, public services, land reform, monetary policy. So those are some of the mechanisms that we can use to effect redistribution of wealth. So basically, why do we engage in redistribution of wealth is because of the huge gap that is created between the rich and the poor in the country. So if you have got people that are very rich and you have got people that are very poor, we are having a huge gap that is in between. So the government can intervene and reduce that gap through redistribution of wealth. So you're going to say that the issue of taxation again is coming into play, whereby the rich are going to be taxed, and then the government collects that revenue, and then they redistribute that income to low-income earners, so that they can be uplifted in terms of their standards of living. So it can be redistributed through the issue of social grants. So basically, we see that with that now, the gap between the rich and the poor is going to be closed. So this can be a simple explanation that can make us understand exactly what we mean by redistribution of wealth, or rather, we can call it a redistribution of income. So basically, this is what we have in terms of redistribution of wealth. So moving on to our next part. So you see that on our next part, we are now looking at the characteristics and functions, which is our module 1. So the next part, we are looking at the first characteristic that we have of tax is that taxation is compulsory. And we know that everyone has to pay tax. So it is compulsory. So it becomes one of the main bases that can be used to describe a tax. It is compulsory. Then on the second part, in terms of this characteristic, there is an absence of quid pro quo, whereby a taxpayer cannot expect to receive a measurable value of each unit of currency paid over in the form of taxation. So the quid pro quo, we are saying what we give, you expect to receive the same value of what we have given. So that's quid pro quo. So the characteristic of tax is that there is an absence of that. There is an absence of quid pro quo. That is, the taxpayer cannot expect to receive measurable value for each unit of currency paid over in the form of taxation. So basically, I think we can simplify it by explaining what exactly is quad pro quo. So you see that this is usually we call it a Latin phrase. So it means something given or received for something given or received for something else. It also deal with arranging that scenario that we are talking about. So basically, it's something for something. When we give something, you should receive something. That is quad pro quo. So if you pay tax, you do not expect to receive the same return as the amount of tax that you have paid. So basically, that's now the absence of a quad pro quo. So basically, that's what we have in terms of our characteristics of tax. So remember, we have also analyzed in terms of characteristics. So we also need to look at the types of tax that we have. We also have direct taxes and we also have indirect taxes. So we can start by looking at direct taxes. We have got examples that we are given there, whereby we've got income tax, indirect, also have excise duty. So basically, this is the difference, the different examples that we are given in terms of direct taxes and indirect taxes. So we also need to understand what we actually mean when we say direct taxes. So direct taxes, these are taxes that are levied, amounts levied on directly on taxpayers. So if the revenue collection agent goes direct to the taxpayer and charges. For example, pay as you earn in the form of income tax charged on workers. They are charged directly on the salaries and salaries that are being earned, which is different from value-added tax as an indirect tax. So remember, on value-added tax, the entity that collects the tax. We are talking about, for example, the supermarkets. We are talking about maybe we can talk about a ShopRite as a retail outlet. Is the one that collects the tax from the customers, but the one that is directed to pay that value-added tax is the customer that is buying the good. But indirectly, the the VAT will be charged to a ShopRite. So ShopRite collects from the customer and then submit the revenue to SARS. So basically, this is what we have in terms of direct and indirect tax. So basically, we can also try to understand what is a value-added tax under indirect taxes. So value-added tax, basically, it is a consumption tax. So the value-added tax comes as a consumption tax that is levied on the value added to each stage of a product production and distribution, obviously, processes. So it is indirect because the consumer who ultimately bears the burden of the tax is not the entity that pays it. So basically, that's the information that we have. Then also have excess duty, and the excess duty basically is a duty that is levied on manufactured goods. So basically, this is what we have in terms of the types of taxation that we have that are subdivided into direct and indirect. So further on, other direct taxes, we also have examples that we have, and then indirect taxes, we also have examples that we have there. So basically, this is what we have, guys, in a nutshell, in terms of the module 1. So let's stay tuned for more videos to come. We are going to move on and look at module 2, 3, and we see we reach the end of the modules that we have according to public finance and 6. So let's meet again in the next video. As for this video, I'm signing out.